Welcome back to Krown's Crypto Cave and another different type of video this morning. A little bit of a market review for the week, as I've been kind of enjoying doing these more relaxed, laid back, standalone videos to kind of analyze the greater market forces that be. So I want to go over what's kind of happened here in this last week's worth of price action. Essentially, we have done something pretty damn significant with the culmination of this $2,500 move to the downside being sparked off by another rejection off this 200 simple moving average, this red line right here, which is now angled downwards, sloped downwards, which is essentially putting pressure to the downside on price action. And you probably already knew that. But let me say something a little bit more on this. More importantly, what this tells us is that we have no change of behavior ever since we broke our 200 simple moving average. Again, a very easy litmus test to understand and visually get a very quick wrap up of the general market structure. So we've been living under this for the last half year or so. And with this rejection, not only are we living below our 200 simple, but also our purple 200 exponential moving average, which we have been trending below for well over a week now. With that said, we did see again $2,500 from this 8,500 high to about our 6,000 low right around here. Bitstamp working down to 59.95 and 75 cents. It looks like. So with that said, you would imagine that a little bit of a relief rally might be in place. Well, of course, we do have this nice area of support kind of marked off if we do want to put a nice horizontal level in right here. Actually, let's go over here to our Finex chart as it's already done up well for me. And let's put this guy in right here. As you can see, 1, 2, 3. Okay, good historical relevance. I like it. All right. So you can see that we were likely to bounce around here. We've been talking about this. We've been speaking on this in the most recent streams. We also did kind of bottom out in a way on this red TD9 in your TD sequential, which has led to a 1 to 4 correction, and now we're actually printing a green 1 so far. But keep in mind, this has plenty of hours left in the day to have some fuck, so to say. So with that said, I want to go over the bigger market structure here, because this is what's most important here. I'm actually going to get rid of some of these lines as they're not too relevant at the current moment in time. What's most relevant is actually just this little area right here, and we'll get to that in just a second. Okay, so as you can see on the right-hand side over here, I do have my Fibonacci retracement, and I've taken a fib using this 10,000 swing high as my first pivot, and then using this 5,800 as my second pivot. And you can see not only did we get rejected from our 200 simple, but it was also a 618 Fibonacci retracement from this area over here. That implies a very bearish algorithmic target for the traders using, who just program their bots to do the work. And you've probably seen this before. We have a very brotherly pattern going on in this part of the market phase right here. After you had your parabolic run to 20,000 over the last 2-3 years, you have your reversal phase right here, and then that's when things change up. So you have your real move down, then you have a correction upwards, right? And this was a pretty damn powerful one. It was about 2 times from the low of 6,000 all the way to almost 12,000. Then your real move down, corrective move up, $3,000 off this 6,600 low back to 10,000. Okay, the bounce again a little bit weaker. And then you have another real move down, and then the corrective move up, this one getting a little bit weaker, again about $2,000 up. So with that said, you can see that the market forces are generally getting more aggressive to the downside. And again, when we're talking about market cycles, these things happen and develop and evolve over time slowly to essentially just make people extremely frustrated. And that's exactly what these markets are designed to do. It's designed to frustrate the average person, the emotionally unaware person, which is pretty much all of us. If you're a human being, you probably have to deal with these sorts of things. Me as well. I am a human. And with that said, it looks like we are in for a little bit of a bounce area right here. A lot of things are pointing towards that area, like we saw the 9 on your TD right here. We also have a little bit of bullish divergence on your RSI over here. We also have a little bit of bullish divergence in our stochastics crossing up as well over here. Again, I want to see my stokes kind of crawl back up above the 20, but overall, we do have a lot of things pointing for or calling for a little bit of upside. However, again, the big occurrence of this last week and what has really made me overall extremely bearish is the break of this 6,600 level right here, because with that break, we no longer have an immediately bullish scenario. And let me just kind of go over why this is important. Now, of course, whenever I'm presenting information or whenever I'm doing my own analysis for my own purposes, I want to be as unbiased as possible and kind of give both sides their credence. And as of last week, we actually did have a a potential more immediately bullish scenario, as long as we were holding above this 60, what do you want to call it, 6,800, 6,700, whatever you want to call it. Same thing in my opinion. It was a 618 Fibonacci retracement. And this was kind of like the last hopium for bulls in my opinion. Although, we were kind of putting two and two together. If you've been following these videos, that before, the bears had a lot more in their favor. Leaning into that break. However, as long as we were still holding 6,700, 6,800, you could still make the case, although it was a very weak case for the bulls over there. And when I say make the case, I mean for like a more immediately bullish scenario where perhaps it picks itself up from here, gets back above your 200 simple. That would be kind of like the next big moniker that I'm looking for. And then really if you look over here, it's the 11,500, 12,100 area right here. This area that we double topped in and had this massive major liquidity pool hunt before this major move down right here. That's kind of like the last of the Mohicans, if you want to call it that, for like the bearish scenario, right? If we start getting them up there, then really there's no reason to be overall bearish. But for right now, we quite literally have the opposite of that. So with that said, yes, we are finding support around here, which is also your 886 Fibonacci retracement. Not a strong support at all, but you do have reactions along it, as people in crypto seem to be looking at this sometimes. So where can this one go? So, of course, when it comes to technical analysis, there's no such thing as a goddamn crystal ball, no matter what Elliott waivers would have you believe. However, it does look to me like we do have a very obvious horizontal resistance right here, about 65.30-ish on Finex. Adjust for exchange, it will differ. And let me just get rid of this fib right here because we do not need it currently. Anyways, oops, hey, get out of there. Damn it. Okay. So with that said, yeah, we do have this area right here. I think that one's pretty obvious. And then obviously, and then more importantly, this area right here, the 68 to 6,700. So again, when we broke that area, that was a huge thing because it got rid of the more immediately bullish scenario. So that also means that as long as we live below it, as long as Bitcoin is closing dailies below it, this thing is to be interpreted, in my opinion, with heavy bearish goggles. Whether we can rally all the way back up to this area right here, and I'm going to represent it with a nice blue box. So we can go along and follow along more easily visually, as I'm a visual guy. And so my point is that as long as we're closing dailies below this area, very, 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 very bearish. I'm looking for shorts essentially. Now, yes, I did buy this support yesterday. I was, or at least I hope I was clear with that in yesterday's stream, or at least I think I did show it in yesterday's stream. Good. And I held it. I've actually gotten rid of most of my positions so far. I no longer want to be long right here. But again, we can have continuation up until this area. 6,500 wouldn't be too hard, and the blue box territory would be a great trap area, so to say. And keep in mind, just because I'm presenting these areas doesn't mean that they're the end-all be-all. It just means that they're, in my opinion, very, very good risk-reward setups and very high probability trades. So if we were, the reason why I like this blue box area to be a short player in, for example, is because I know that the second that we close a daily above this area, I'm wrong, and it's time to not be short anymore. So I take a very calculated loss. My risk would be, $100 at most. And that's worth it to me when I'm looking for, we'll talk about the targets to the downside. And again, I really hate that word targets because, well, I fucking hate it when people say, hey, what's your target for this? And it's like, oh my God, let me just trade for you too. All right, so without sounding too arrogant, sorry about that, but but it is just kind of a weird thing sometimes, and scares me a little bit when people do reach out to me with trades that I've been taking on stream without putting into context what I'm trying to do, because I've been doing a lot more hedging and futures play on stream, which I don't know if it translates well to the average person. So with that said, in the more immediate time frames, I'm not too concerned with what's going on over here. Like I said, it wouldn't be too. It looks like we already have tested this 65-30 area and rejected off of it yesterday. But we do have some. We could certainly make another try at it. And again, we could very easily hit the blue box. But more importantly, the reason why I'm not looking at this rally is like the reversal upon reversals is a couple things, of course. First things first. This to me just looks like a nice bullish divergence play that a lot of people are watching. Also, we had we quite literally lost about $2,500 in 12 to 13 days straight, quite literally straight down. I mean, yes, you had one little bounce right here, a piss poor bounce indeed. Very little volume behind it to begin with, just like our bottoming formation right here as well. Anyways, giving both sides their credence, I do want to talk about this. We also have a ton of shorts closing. And funnily enough, well, maybe not funnily enough, if you've been watching along on stream, we've had this area marked off at about a little bit above 30,000 for shorts on Finex, and that's because historically speaking, whenever you get around that area, it's just like it's too many people in the bus syndrome, right? And when too many people are in the trade is crowded. And of course, I'm sure most people have heard the saying that the crowd is typically wrong, and that is, that's in more often than not the way that traditional markets work. And if you were around yesterday, shorts were actually above longs for the first time in a long time. No pun intended. But as you can see, this also led to a lot of shorts taking profit. We lost about, about 3,000, about 3,000 shorts in the last 24 hours, which is certainly enough to spark off a little bit of a rally like we're seeing right now. And it can very easily get extended too. So I don't want to make it sound like it's a nothing rally. Of course, whenever price action happens, it's real. The liquidation engines are always working no matter what. So it doesn't matter if you think it's manipulated or organic or not. That's those aren't real words to me. I think that they're loser words, to be honest, because it's just passing off responsibility. At the end of the day, price action is price action. You cannot argue with that. Unless you just don't want to accept the liquidation engine again. So, all right. So going back on over here to Finex, that to me explains why we had this major move yesterday. And yes, it can get extended to here, but again, the big picture to me is that we have everything that I need to see to be very bearish. Now, from the standard technical analysis definitions, using our exponentials and simples, especially if you're in the technical analysis program, we've talked at length about this, and a lot more than I'm about to go over right here, right now. But just to kind of briefly get everyone on the same page. Okay, first things first, we are living below the 200 simple. Okay, we're living below the 200 exponential. Not only that, but we have our yellow 21 exponential crossing to the downside of your green 55 exponential. Pretty damn bad right there. We have our 30 simple moving average, this blue line right here, leveling off after this major rally that we had 3 weeks ago. And once that starts to angle down, that will put extreme pressure down onto price. We also, if I switch my inputs over here, if I can put on a 10 simple, get rid of my 200, put on my 10. You'll notice that the 10 is below the 21. The red is the 10, by the way. The red is the 10 simple moving average, and it is trading below. It's crossed below the yellow 21 exponential over here. Very bad as well. So for all intents and purposes, this is essentially a bear market, with the exception of this blue 30 simple moving average, which is flatlined right now, which you'd imagine after this current price action. But that also likely leads me to believe, and again, this is my opinion here, and this is what my experience typically has kind of aligned up with. But when this thing does level up, these things are averages, right? So you get that rubber band effect of it kind of snaps back a little bit towards the mean. Now, if and when you see this blue simple 30 curl back down to the downside, even just ever so slightly, that will be like putting the foot on the accelerator scenario where, you really see some downside play out significantly. Let's go see what else we have to kind of line up with that. Well, the weekly, of course. The weekly to me, let me put back on my 200 right around here. Okay, great. So weekly 200 right here. Okay, and the weekly to me is extremely bearish. Again, it's just, more of the same. A rejection off your 30 simple. And not only with 2 weeks ago did we break our 21 exponential, but we also broke our green 55. And even more importantly with today's weekly, which does close today, later tonight, the only way to kind of turn this around and make it look, quote unquote good, in my eyes, is to get at the very, 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 very least back above 67.50. However, that would still not really do it to me. I need to see it in more of like a reversal above one of these exponentials that it has rejected from. The green 55 would be much more, would look much better, and that's around 7,200. So just put it in perspective, that's what needs to be done in order to, from a technical analysis standpoint, make this look like it has, a chance to reverse here, which I strongly believe it does not. Okay, again, I'm trying to be as balanced as possible. This is the best that I can come up with, and that's, we do have a few hours left in the day. I mean, we have plenty of hours left in the day, but I would hazard a guess that that's very, 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 and like maybe 10 more varies unlikely. By the same token, this cyan 100 exponential is now a magnet for price action after rejection from all this area right here. It's essentially just revisiting our former lows. That's also represented by our 3-day 200 exponential right here, which you can see we've had another bounce off of, a weaker bounce. Again, not too much volume behind this, but this does, and this one did just start. To give it some credit, we don't, we really don't know just yet how to interpret this one. It's too young. It's just a baby. But here's a problem with this area. This 5,800 or 6,000 area, whichever one you want to refer to it as, is they're essentially interchangeable in my mind. Is kind of like the last line of defense. Once this falls, if and when this does fall, right? Because again, we can't make assumptions just yet. But my opinion is certainly leaning towards there to kind of separate my opinion from technical analysis. However, if and when this does fall from a technical analysis standpoint to make a difference here, there is very little holding us up from this 5,000 level. And you can see that yourself in the volume profile represented very, very easily right around here. There is absolutely no business being done all the way from about 4,800 or 4,500, we'll call it, as these are, they're less precise, from that area. So that would be, another, I would imagine another $1,000 move most likely. As again, to put this into perspective, when you have this amount missing on a daily, that is pretty damn huge to use a less scientific term. Let's put this in perspective by going down to the 4-hour. So if you notice over here, we had very little business being done in the 4-hour over here. Now on the daily, this area was represented by one of the biggest volume by one of the biggest volume nodes, I should say, high volume nodes. But over here, you can see that there is actually very little going on right here, which is why we kind of just scooted right through this area. Just, we dump right down on the way down, we pump right up on the way up, and we dump right back down on the way down. Now, to put that in perspective again, this area is represented by a huge volume node over here, which, and again, over here, we have absolutely nothing holding us up from in this area right here. So you can just imagine that's going to make it a degree bigger, in a reaction, so to say. So again, if we do lose that area, that to me is the next big, short to play, in my opinion. And that'll be denoted essentially by taking out a current low. The second that we make a current low, just printing below there, I do believe that'll happen pretty damn rapidly. It's one of those things. We've really worn out our welcome along this area, using it as strong support for quite some time, bouncing off it 1, 2, 3, 4, 5 times now. So this is extremely significant because it also implies that if we break this area, we'll call it 6,000, it will very, 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 and a billion more varies, and I feel very strongly about this, if you can't tell, it'll become extremely strong resistance back on the way up and kind of act as like the ceiling, so to say, for what I think will lead into the accumulation phase of this next part of the market cycle. So with that said, I'm getting way all over the place over here, but let's go into the depths of this, and let's go back to stamp over here. And let's talk about the higher time frames and some ideas of where this could go. Because again, remember, we did put in a major bear flag, and this is, going back to our idea of about the 6,800 level right here. It very, very lovingly coincides with the break of this major bear flag support, confirming the bear flag, and then continuation downwards. So with that said, we do have a legitimate bear flag, and if we do have a legitimate bear flag, we can make a legitimate measured move. And again, measured moves do not, they get you in the ballpark. They don't just get there. It's not like a scientific thing, right? But it gets you into the ballpark, and that's all you need to do. Whether it's a couple $100 off on a major move like this, that's all good. So I have it represented here by this nice blue box. It would be pointing us down to around 2,800, give or take a little bit. And I do like this area from a historical point of view. The reason for that is because we do have significant volume being done over here, which I believe this was like one of the few times, or one of the many times, that China banned Bitcoin. And I do remember that it seemed to be a couple institutions came in and kind of set in a floor. I don't know if you guys were around during that time, but this stab down right around here was supported extremely quickly, and that to me is indicative of institutions coming in and supporting price action. Very, very important. All the way to this 3,000 area right here. You can see that this big pump and dump back down to this horizontal support, the former resistance of this area now acting as support. So I really do like that from a historical sense. Not only do we have both these things pointing towards that direction, but we also have our 886 Fibonacci retracement from the ultimate high to the ultimate low of the past market cycle, which, on its own isn't that big of a deal. However, when we look at the greater picture, where did we bottom out in 2014? A very similar market cycle, where you have a parabolic rise and then basically a parabolic drop off. We bottomed out our 886, the capitulation wick just wicking down there very, very briefly and bouncing up about 40% before the end of the week. Also, as you can see, that the red 200 simple moving average on the weekly would likely start to curl around and come into this blue box territory as well, which again is where we bottomed out in 2014. Now, of course, on this Bitstamp chart, there's actually not enough price history to represent that, so I'm gonna have to go over here to my BLX chart, which I typically don't like to use too much, but you can see in 2014 you actually did bottom out in your 200 simple. Again, just one of those easy ways to kind of tell where the general market lies. All right, back on to my Bitstamp over here. Not only that, but in 2014, we have a very similar market cycle, right? Where this logarithmic downtrend line right here was kind of what held the first phase, so to say. And we have a very similar one over here, right? And that, and we actually even have a very similar percentage drawdown. Again, not my favorite way of doing it, not my first port of call for sure, but when they line up, I think it's worth it to kind of put into consideration, especially, when you have, 4, 5, 6 things pointing towards the same direction, it's worth paying attention to. So let's kind of see what this comes out with. Again, for the first part of this phase, very similar drawdown, 70% versus 71.33%, essentially. If we extrapolate this down to the ultimate low of 2014 market cycle, you can see that it bottomed out at about 86%, 0.69, we'll round, right around here. And funnily enough, if I do extrapolate this, just again playing the assumption game, which is very, very bad, but just maybe taking it down to this area right here to where our measure move lies, what do you see? 86.86 and a quarter percent drawdown right here. If we were to extrapolate to our measured move area on this downside. Again, just because I'm coming up with these things doesn't mean it's going to happen for sure. I really want to be adamant about this. It's just I'm counting up the cards, essentially tallying up who has, which side has more things pointing towards it, looking for potential bottoming and bounce areas for this next part of the market phase. Again, when we're talking about market cycles and market phases, the end of a market cycle needs to be marked by absolute extreme depression. Capitulation is painful, and when I say painful, I mean it really truly needs to be painful. I'm talking about people are going to be looking to buy this 4,400 area right here. Everyone's talking about 4,400. Everyone's got it on their minds. Everyone thinks that that's probably going to be the low, or 5,000, something like that. What actually needs to be done to cause mass capitulation is to make everyone think this one right here, which I think is pretty much what's going on right now. But what also needs to happen to cause capitulation, to take it one step further, is you need to take everyone's expectations of this area right here and absolutely fucking crush it with no regard. and leave these people, thinking that they bought a bargain, taking it another 50% lower would make sense to kind of make them capitulate. So between this area and this area, I don't know, it's probably like a 30-40% drawdown. So that would be, if you can do that in a very, very quick succession, it would be, I think that would be enough. But again, when it comes to this, these are only ideas. The only way to know when we actually do bottom out, when Bitcoin actually does bottom out and you have your low in, so to say, is to see how it reacts when we get there. So we literally will not know until it happens. And what we're looking for is something like this. Again, we're looking for something like this in 2014. This very, 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 very heavy volume, but major wick to the downside. Again, keep this in mind. This wick alone is about 40%. And this candle traveled almost 75% in a week. Like 1 week, 75% move. To put that in perspective, what is a 75% move? From 4,400, that first area that we kind of have marked off, well, 77% move would actually be taking us all the way down here to about 1,100, which, if you look at the monthly, is actually not too out of the question. Speaking of, we'll just briefly go over to it, and then I'll give you the more hopium scenario. The monthly is extremely bad. Crypto Twitter was obsessed with calling this monthly dilly over here a bullish engulfing, which, of course, it was by no stretch of the imagination a bullish engulfing. I don't know where people get this idea. There's obviously no verification for people in this space. Not that there should be. And, people are self-educated for sure, and that's all well and good. In fact, I'd say probably the best traders are self-educated. But just reading Investopedia or listening to, insert Twitter hero here, is unlikely to do it, because again, these things they're not just shapes. They need to imply something. So first things first, they actually did get the shape wrong. You need to trade below the low of your prior, which we did not, and close above the high. You did that. But what's the second thing? You need heavy volume if it's going to be reversal. You do not have that. In fact, you just have what looks to be a consolidation volume right here coming off this guy right here. And more importantly, and I think this is pretty much crushed everyone's dreams, at least I would imagine by now, this resulting or the following monthly right here for August has already fully retraced the prior. Again, our July low was 60.72 and our August low is 59.95 and 75 cents on stamp. So with that said, we are coming back down to your yellow 21 exponential, which is, again, not the worst thing on its own, but the fact that we've already tested this, and I count this over here a test 1, 2, and you can count this as a third time. This is very unlikely to come up with anything good for the bulls, at least. If you're short, probably pretty damn high trade opportunity over here, as I would imagine next time that we formally touch this, which is 59.88. You can see that we initially bounced off of it. I guess it was yesterday. It's very likely that it does break. And where would we go from there? I mean, again, just looking at the monthly right here, just looking at candlestick formations, there's very little holding us up from about 4,800. Again, agreeing with that idea of the volume profile. And if I'm going to be extremely bearish, again, and I'm not sure if I really don't believe that this is going to happen, but it is certainly possible. Just looking at candlestick formations over here, you do see, your former market cycle top right around here. That's typically a good pivot for markets. It's actually how we bottomed in 2014, taking the bottom in testing the top of your 2013 market cycle right here, this was never really a market cycle right here. This was just a parabolic run. It would just be a test of that area, and that'd be very, in a way reasonable to say. Now, with that said, you could even come all the way down here to 690, and that actually would still be considered in a way a healthiest consolidation. I know that this sounds crazy, and again, I don't believe that this is going to happen, but it's worth talking about because this, just looking at candlestick formations, it's certainly possible. Certainly possible. Again, I'm not saying that this is going to happen. I'm just saying, be aware. Be aware of your risk at all times. Okay, so with that said, let's go back to our daily. And we actually do have something let's go to like the 4 hour. We do have something a little bit more visually apparent right around here, I believe it was. Yeah, we had this broadening wedge. Now, this broadening wedge does have a measure move to be made off it, right? And it's essentially, you can essentially take it like a flagpole as well. Perhaps you even look at this as an inverted cup and handle. There's many ways of looking at this one. Let's take it all the way to the top and just applying the breakdown area right around here. And where would this be pointing us towards? If I can just zoom out just enough. Well, that'll be pointing us towards pretty much where we are, where we kind of looked at as the next potential scenario of a big move. What else do we have pointing us towards this blue box right around here? Because again, that's one thing before the other, right? And again, we're making assumptions here, right? This is making the assumptions that we actually do break the, do you want to call it 5,900 area, 5,800? Again, it doesn't matter to me. The next time that we kind of head down there, I do feel extremely strongly that we do break it. Well, we do have this area over here. Remember, this hasn't gone away just yet. We had this major inverted cup and handle being put in over here. The volume's correct. We have distribution at the top. It's a distribution pattern is what it is. You have good volume on your extremities. That's exactly what I need to see. You got a handle right here, or what resembles a handle, so that's good enough. And we can make a measure move off that, and you can already see that I have done this over here. But just taking our measure move from there and applying it down to here. Well, where did that point us to? Oh, this nice horizontal right around here, which again has very, 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 very good historical relevance. Going back all the way from last year, September, which again, China banned Bitcoin around that time again, or Korea, I don't know, one of those nations. That probably sounds extremely stupid for me to say, but hey, sorry. I just remember someone was banning crypto again, and we had this major down move from about 5,000 all the way to 3,000 in the span of a few days, and then you can see this major spike up in volume right here. So again, an institution came in and put in the floor. I believe it was actually J.P. Morgan in Germany. So we have that. So sorry, to reiterate, we have the measure move, we have the horizontal, we have the volume. Okay, so that's good. What else can we come up with? Well, going back to our Fibonacci retracement, it was a 786 Fibonacci retracement from the ultimate high to the ultimate low of the last market cycle. So again, another algo target, so to say, putting us in that region. Not only that, but you can see it's an intersection of several of these trend lines. Again, this logarithmic trend line, this horizontal trend line, and then this dotted trend line, which if I can actually zoom right on out, the dotted trend line is very, very important because it goes back to the genesis of Bitstamp, one of probably the longest still running exchange from the inception of Bitcoin. Like I know it doesn't have like perfect information going all the way back, but you don't Mt. Gox doesn't trade anymore, so you can't use that. You have to use the next best one, and that would be Bitstamp. And this trend line has essentially been valid ever since the inception of Bitcoin. We can say I feel pretty damn comfortable saying that. And it's never been broken. And more importantly, anytime that Bitcoin's ever touched it, it's never gone lower. And it just, if you can buy along it, it has very good historical relevance to kind of maintain you upwards and onwards. So with that said, all these areas kind of converge right around here, right around 4,400. So again, 4 or 5 different things pointing towards there. Also, your purple 200 weekly exponential is likely to kind of curl up around here as well. And what else do we have? Oh yes, of course, we have the volume profile. Remember, volume profile is, or I think we already did talk about the volume profile, but let's just briefly go over it or kind of in perspective again right here. You do have this major gap, and it leads you down to this high volume node right around here, which again would be in that 4,400 range. What's also important though for understanding the next area too, remember we do have the 3,000 level kind of marked off as well. I forgot to talk about this, but yes, this larger downside, I don't want to use the word target, but potential area we'll call it, is represented by a major volume node as well. So again, good historical relevancy of these areas, which is exactly what I want to see for potential bottoming, or I mean a high quality bounce, a very tradable bounce I'd imagine, but a potential bottoming and reversal area as well. Okay, so with that said, that kind of wraps up that. Oh, also, we did just to kind of go over in 2014, we did accumulate. You can see in this accumulation range between the 886 and the 786. So it could be that you see, again, this is just an idea, but an accumulation between this area and this area, which, if we're looking at the higher term or the higher degree of patterns over here, anywhere in that area, from a historical sense, would suggest a decent long-term buy. Now, again, obviously, if we do head down to this 3,000 area right here, that would very likely coincide with the weekly break of this dotted line right here. It actually doesn't have to. It actually does not have to. And by the way, I just want to quickly mention this as well. This first target, this first 4,400 area right here, potential area, I should say, does actually kind of have a time on it, right? Because all these things converging right here does provide some, some way of getting there, right? And that would suggest by the end of the month that we likely meet this area. Now, again, I'm not a fan of time analysis. I really haven't seen it done well enough over time to use a bad pun. With successful traders. That doesn't mean it can't work. I just haven't seen it myself. I don't know anyone successful who does it, over, decades and decades of experience with lots of money in their bank account, essentially. So yeah, I just wanted to quickly point that out. I'm not quite sold on that idea, but just for the purposes of being thorough, I thought I'd add that in there. Also, again, I don't want to be Mr. Doom and Gloom, right? Because with these sorts of areas, tentatively speaking, it can be kind of scary, right? But I don't want to be Mr. Scary. I don't want to be Mr. FUD. In fact, I fucking hate that word, but I do want to be Mr. Opportunity because, again, that could be the opportunity of a lifetime. And again, with this dotted line down here, we have something taking us forwards. And actually, with our two parabolic runs in both 2014 and in 2018, we essentially have an upwards governing area as well. So I also want to say I actually am a believer in Bitcoin long term, and with this we can look at potential zones or ranges going into the future. So this is why I'm a fan of Bitcoin long term. I believe that, as long as we kind of respect this area, you have some pretty damn good upside. So let's just look at what the price could be in a range on the first week of 2020, right around here. The bottom of your range would quite literally be our former high of around let's just call it 20,000. The top of your range would quite literally be around 93,500. Let's just take that a couple more years. Let's go to 2020. 2022. Right around here. So this is 2022. What's the bottom of our range? $150,000. And the top of our range is about $400,000. So again, I want to go on record as saying I strongly believe that we're in for new lows this year, or we're just in for new lows in general. However, over time, I do think that I think that Bitcoin does have a strong chance to get to some of these crazy numbers that you hear people like John McAfee speak on. What else? I know that there's one other thing. Oh yeah, let's quickly talk about this as well, because I'm sure people are gonna be like, well, Krown, what the hell's going on over here? In 2013, you had a parabolic run. Why can't we just come back down to this area and then go parabolic again? Well, let's talk about it. This is where I want to use my indicators, right? And my indicators are telling me that my RSI this is 2014 right here, representing that area. They never got below. They never really even got into the bearish zone right here. They just got into the neutral zone and then right back up again. It wasn't until 2014 where we started trending below the neutral zone, the 50 zone, and into the bearish zone, and stayed below there for quite some time. And again, we never even got close to revisiting this area until, well, you guessed it, the last couple months. We've been living below the 50. As you can see, the last rally was stifled by the neutral zone. Basically, the way that I read that is it's a test of the neutral zone and a rejection of the neutral zone, and then back down, trending right below the exponential once again, and heading perhaps below the 45 region, which is my bearish zone as well. So yeah, just wanted to quickly talk about that. What else do we have to talk about? Let's talk about, we can go around the teddy sequential over here. And as you can see, we do have a price slip to a red one, perhaps, again, being set in stone later tonight. If it does close here or lower, well, pretty much anywhere, it's probably going to be red. And again, if you did get your full count to the 9, to the downside on a red 9 right here, and then a 1 to 3, and then a 3 candlestick correction right here, and then trend continuations right here. Again, that is a very likely, it's just a very likely scenario that you do see trend continuations if we do put this red one in place. So look for next week to take out the low of this to print a red 2, and that would actually give the traders looking at this indicator a short entry. What else do we have to talk about? I think that pretty much covers Bitcoin. Let's also talk about a couple of the top alts right now. Let's go with attention to Ethereum, Mr. Buterol over here. Mr. Buterol, again, this is why I was overall pretty damn bearish on the market, because the other large cap market coins never joined in Bitcoin's impressive rally to 8,500. In fact, they were stuck in this more bearish formation here, this bear flag that you see. And Mr. Buterol broke that bear flag to the downside much before Bitcoin did. Also Litecoin as well, and they're kind of like in different evolutions of this. And again, coming from my background as being an equity options market maker, I'm used to looking at like the indices and then, the sectors and then your individual stocks. And whenever you have, your indices leading the market, but your individual stocks are not following, that's a very bad sign. In fact, there's really no scenario that I can think of where that ended up well, So with that said, I kind of look at Ethereum, as kind of like, number two, so to say, in the market, just because most people are aware of it. Bitcoin's number one, Ethereum number two, Litecoin number three. I'm sure that people are going to, regale me in the comments for that. But, just for the purposes of this, let's just go with that. And Bitcoin was rallying, Ethereum was not following, Litecoin was not following. Pretty much everything in the market was not following there in like different degrees of weakness. Now, Ethereum, obviously playing out this much more aggressively to the downside and making it into our blue box territory right here. Actually wicking down almost perfectly to our measure move off this bear flag. So again, that's also why I was thinking a little bit of a bounce yesterday. Could this get extended? Sure. I mean, here's the thing with Ethereum. You can get all the way to here, all the way to about 360 range, but as long as you're below it, very, 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 very bearish. I mean, you can even say the same about, this area over here. As long as you're below about 500, you're in heavily bearish territory. But we can bounce all the way up there and it'd still be, it'd still remain that posturing. However, the next kind of big move for Mr. Buterol over here is that if we do break about $300, I just don't see much holding it up from this $160 area right here. And Litecoin has a very similar trajectory as well. Again, putting this, I guess, more of a broadening wedge over here, and then broke to the downside, hitting our measure. Well, just about hitting our measure move. Not perfect, but a few bucks off. Again, they're not like a exact measurement. It's like a ballpark estimation essentially. Litecoin actually having a much better reaction than most of the other ones right now. Seeing continuations off of yesterday's. Anyways, same thing for Litecoin. As long as you're below this area, $75, it's extremely bad. Extremely bearish is what I should say. And we can bounce all the way up to $75, and I would still say that's a sell right there. However, if you start closing dailies above there, then yeah, maybe you got some. But by the same token, the second that you lose $55.50 support, I really don't see much holding you up from this area right here, about $34, $35, something like that. So again, that's what makes me a little bit more bearish on Bitcoin and makes me think that we will resolve this to the downside. Let's also look at the futures. I forgot about this. I should have talked about this earlier, but we will very likely have a gap down. Oh, they opened. Okay, fair enough. That's funny. So I was looking at this morning, and we actually hadn't opened yet. I was just looking at this one right here. And now that they're officially opened, you can see that we have filled the gap right around here, and it's been down after that. So yeah, we're gonna have to keep that one in mind. Or actually, no, sorry, we're gonna have a gap up, as this is not opened right now, is it? Yeah, it's marked closed. That's right. Okay, there we go. I must have been looking at something else. And the big thing with this is that we're gonna gap up, probably open somewhere right around here, 63.50-ish area, and then figure it out from there. Again, if you're aware of playing the gaps in the traditional equities markets, it's going to likely act the same way. I'll put it that way without leaving too many hints out there. So overall, all futures are still trading at a major discount. I mean, the price on this one doesn't matter right now because it's closed. But if we go over here to BitMEX, September futures are trading at a almost $100 discount now. December futures are trading at a little bit less, like $80 or $90 discount. So that means that the outlook is pretty damn bearish going forwards here. But that doesn't mean it can't change around. It just represents what people are trying to do in playing these. In the more recent price action, I think I should go over this as well. It looks to me like we're doing something like this where we're kind of operating in a channel, bouncing off both ends. I was playing this channel earlier. It's been pretty damn nice to me, so I'll respect it as long as I respect it. And again, a falling channel typically does break out to the upside. So keep that in mind. I don't really have a measure move to be made off this, but again, anywhere in this blue box territory right here, I would love to be a seller. And I'd look for a confirmed breakout out of this channel area. Yes, technically above this area, around 6,400, but really this horizontal area would be a lot more convincing to me, 6,500. So again, 6,500 is my area of interest, and then this blue box territory between 6,750 and about 6,850, 6,900, something like that. By the same token, the second that we break this area right here, 6150, I become on high alert for the downside once again. And I mean, once you break the bottom of this as well, 6,000, we'll call it even. I would highly lean towards seeing some significant downside very, very quickly. So again, That's going to do it for this market wrap up. It's been an absolute pleasure speaking with you. I'll be back on a little bit later to do a live stream, so I look forward to seeing you guys soon. All right, guys, take care and have a great rest of your Sunday.